Stocks perk up after Trump says a decision on striking Iran will be taken in 2 weeks, raising hopes of a diplomatic resolution of the Israel-Iran conflict. Realty, utilities and metals are the big gainers.
RBI provides big relief to project financing banks and NBFCs by slashing the required provisioning for such loans from earlier proposed 5% to 1%. Stocks of these lenders perk up.
Sun TV slips after Dayanidhi Maran accuses promoter and brother Kalanidhi Maran of fraud and money laundering and demands restoration of the company's earlier ownership structure.
Britannia MD Varun Berry is confident of the FMCG sector, which is not too far away from double-digit growth. He expects growth to return to biscuits as well, while the non-biscuit portfolio for the company will grow twice as fast. Protein and healthy snacking are two categories he's upbeat on.
Secretary of Shipping, Ports and Waterways T. Ramchandran tells CNBC-TV18 that despite increase in costs, there is no supply disruption. He adds that plans are underway to expand India's shipping and port capacity multifold.
It's a wonderful Friday afternoon that you're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. Why do I call it wonderful? Because for the last few days, the market was fairly jittery. Today, the direction is clear. We're above the 25,000 mark on the Nifty, and all three major indices are doing well for the frontline index. That is the Nifty Bank, the IT index, and Reliance, which is an important heavyweight, can be classified as a sector on its own, has been doing up. So all of that looking good, with the mid-cap index stepping, a shade better than what the frontline index is doing. So portfolio is feeling a lot better too. So despite the uncertainty that we're seeing around the globe, Ekta, seems like maybe our markets are in fine fettle today.
Yes, absolutely, Mangalam. We have the Nifty, which is at 25,000, so it's recouped back to those levels. And as of now, we do have a lot of stocks which are on the advancing side as well. So definitely doing much better in terms of trade today. But separately, just want to point out that Brent crude has also softened a tad bit. So that's the reason why you're seeing that momentum play out in our markets, and that Trump has bought a little bit of time, around 2 weeks, to decide what his decision would be on the Iran-Israel conflict. And that is probably assuaging a little bit of concerns that maybe any kind of diplomacy is still on the table. So let's see how the day pans out. For now, the mid-cap index is doing better, considering that the mid-cap index has week to date underperformed the Nifty as well as the Sensex. But it seems as though it is contracting in terms of those losses at this point in time. So that's what's taking place in terms of the markets. But let's get going on the show. Let's put the spotlight on autos. Total sales show a registration growth of around 6%, led by the two-wheeler segment. Sudarshan is joining in. He's going to tell us, will June see a mid to high single-digit growth in registrations or not? Sudarshan.
So after 3 weeks of June, we have tried to find the basically interest of the Vahan registration data, how's the trend going on. And after several months of the underperformance in the month of June, in the first 3 weeks, we are seeing a growth of almost 6% in total vehicle registration. And it's being led by two-wheelers, which has seen a growth of 8% so far. And also, apart from passenger vehicle, which has seen a drop of 1%, all the segments have seen a healthy growth. Even commercial vehicle has seen a growth of 4%. Three-wheeler also has seen a growth of 4% too. Now coming to company-wise, who all are the outperformers? In the two-wheeler space, two usual names, TVS Motor and Eicher Motors, continue to outperform, and Bajaj Auto and Hero Moto remain amongst the underperformers. So first of all, Eicher Motors, so far, it has done 70% of the total sales that company has done in the same month last year. It's almost the same for TVS Motor too. Now for Hero Motor and Bajaj Auto, so far they have done almost 60%. In the four-wheeler space, Ashok Leyland is the biggest outperformer in the CV, and Tata Motors remains the underperformer continuously. And even in the month of June, so far Tata Motors just has done 50%. Mahindra & Mahindra continues to outperform Hero Moto. For Mahindra & Mahindra Auto, it has done almost 60%. And as far as Maruti is concerned, it has just done 50% of total sales that company has seen in the same month last year. So far in the first 3 weeks of June, total registration is looking healthy after several months of underperformance. We'll have to see how the last 1 week pans out.
Take that point, Sudarshan. Thanks a lot for that. So that's about the Vahan registration data that has come in. Meanwhile, just keep an eye out at the bottom of your screen. There is some clarification that has come in from Sun TV. They've clarified on reports of Dayanidhi Maran sending a legal notice to the promoter of Sun TV, that is Kalanidhi Maran. We've seen a smidge of a spike on the stock price. We'll just try and get some details on what the clarification entails. Remember, Money Control had earlier reported that Dayanidhi Maran had gone ahead and sent a legal notice to Kalanidhi Maran. Sun TV said the alleged matter dates back 22 years. That's what the allegation was as well. That 2003 is since when there have been allegations of fraudulent transactions, as a result of which, Kalanidhi Maran, as claimed by Dayanidhi Maran, has legal control and majority stake of Sun TV. So it is a 22-year-old matter when the company was privately held and not publicly held. We'll try and get in more details on this one as it plays out. But for now, there's a smidge of a recovery on the stock. We're none the wiser because, Sun TV is just saying that this matter goes back 22 years, which isn't any different from what is being reported. But is there any truth in sight, or is there any further clarity when it comes to the legality of the situation or not, is something we will very, very closely monitor. But speaking about stocks under pressure, the other stock which is mildly under pressure today is Delivery, and that on the back of a bearish note that has come in from Jefferies. What Jefferies basically says is that the street was optimistic on Delivery ever since the company went ahead and acquired Ecom Express, and that was on hopes of consolidation in the industry. The stock has outperformed since then. It's rallied about 41% as against the Nifty's rally of 8% since this acquisition was announced. So a lot of this optimism was priced in. What wasn't priced in, however, is the risk of some of its large clients going ahead and starting their own logistics business, which would then lead to client loss for them. And that exactly is what's taking place with Meesho. Meesho's insourcing could pressure its third-party express logistics business, and that's something that will happen as Meesho expands its reliance on its own logistics vertical as well. They expect the express parcel industry to grow at 10% compounding over the next 5 years, as against 30% in the previous 5 years. But the previous 5 years were also buoyed by the post-COVID boom that we saw. And as a result of which, when the industry is slowing down as compared to the previous 5 years, and in that some of their large clients are taking share away by insourcing, they expect their marketplace share in the third-party logistics to halve to 34% by FY28, and that propels them to cut their target price from 500 to 315. Okay, we have some more comments coming in from Sun TV. They say that all acts will be done in accordance with legal obligations, but more importantly, all allegations made are undue, and they are refuting those allegations. So we'll keep an eye out on that. And there's a slightly bigger up move that we're seeing on Sun TV from the lows right now. So they're saying that all the allegations are baseless and they will be dealing with them in legal accordance. But from a valuation standpoint as well, Sun TV's market cap is close to 24,000 crores. They have cash and financial investments of close to 6,000 crores. Take that away, and you have the IPL team, which is valued at about $1.5 billion, which is nearly 50% of their market cap. So X of the cash on their books and X of the valuation of the Sunrisers Hyderabad, the base business is just around 5,000 to 6,000 crores, which a lot of people are finding attractive, which is what may have propelled, everyone to look at it from a business standpoint. So we'll watch out for how this, story really pans out. A 22-year-old story now coming to the fore.
Yes, absolutely. Well, that's on Sun TV. They are giving those statements, as you can see on your screen. The stock is down around 1.5% at this point in time. But moving on, the Reserve Bank of India has eased project finance norms for banks, NBFCs. Lata joins in to give us more details on what this means. Lata.
Well, the draft rules on project finance were very strict. Compared to that, the actual rules which were announced yesterday, that is Thursday, are relatively easier on banks. Basically, it refers to how much you must set aside as provisioning when you give a project finance loan. Because in the past 10 years, during the infrastructure loans boom period, a lot of them went bust. Now, the RBI's move was in the draft rules that more money be set aside in good times so that even if they go bad, you can adjust. But to come to the rules say that banks have to keep a provision of only 1% for a project finance loan. The draft rules had set 5%. At the moment, banks keep only 0.4. So it's more than now what it is now. but it is much less than what the draft rules threatened. In case the projects were delayed, they are called DCCO deferment. What is DCCO? It is date of commencement of commercial operations. If it is delayed, then you have to keep an additional 0.37% of the total loan amount as provisioning for every quarter. The draft rules had said it should be 2.5%. Compared to that, again, it is lower. Then for commercial real estate, the new rules require 1.5% of the loan to be kept as provision. Again, the draft rules were 5%. Once the project becomes operational, see, under construction, you have to keep 1%. Once they become operational, the new rules say treat them as any loan and keep only 0.4% as provision. The draft rules had said even when they go into operation, you have to keep 2.5% as provision and then slowly bring it down over 5 years. So the point is the new rules which become applicable from October 1st are far simpler. What is more important, they apply only to prospective projects, not to projects which are already given. That was another thing which was pressuring bank stocks and the NBFC stocks. NBFC stocks which will also find relief because of this are PFC, REC, IREDA. But in the case of the NBFCs, just one point to note is they already provide more than banks because they have what you call ECL norms, expected credit loss norms. So for them, the change is really not much.
All right, Lata, thanks a lot for that. So that's the view coming in on all the NBFCs and project financiers. A lot of them higher in today's trading session. What we'll do with that is take a short break, come back on the other side. Our special offering, Clutter Breakers, where Ekta tells us about the growth story of single specialty hospitals. Very interesting. Stay tuned for that.
The Money Control Mutual Fund Summit is back in 2025 with its 4th edition, spotlighting the $1 trillion dream. A bold vision to reach $1 trillion in assets under management AUM by 2030. Join top policy makers, fund managers and market leaders as they deliver actionable insights and chart the future of investing in India. Money Control Mutual Fund Summit 2025, 23rd June, Mumbai. Register now by scanning the QR code.
Welcome back. Nearly 250 points higher for the Nifty, but we're talking about the hospital sector in our special offering, Clutter Breaker. There's been a surge in single specialty hospitals lately. Ekta's walked down to the wall to tell us about the growth of this single specialty hospitals. Ekta.
Well, single specialty hospitals are definitely gaining rapid ground in the private healthcare landscape. As of last year, single specialty hospitals made up around 30% of the Indian private healthcare market and is projected to grow around 40% by 2028 to 2.64 lakh crore. Growth is being driven by rising lifestyle diseases, greater urbanization, higher disposable income, and a boom in medical tourism. The interest is evident in the investor appetite as well. Now, over the past decade, 36% of all hospital investments have flowed into single specialty hospitals. Traditional specialties like IVF, oncology and eye care have drawn over 70% of the funding, while emerging areas such as dental and dermatology have attracted over 60% of their capital in just the last 2 to 3 years. IVF and oncology has seen the maximum private equity interest, raising $1 billion each since 2015, with the eye care segment attracting $80 million worth of investments just in the past 8 years. Now, with focused infrastructure, specialized equipment, as well as single specialty hospitals running more efficiently, they can possibly achieve EBITDA margins of around 20% at center levels and a return on capital employed of around 30% at mature centers and even 100% for some mature IVF centers. Amongst the leading segments, eye care is projected to reach around 55,000 crores by 2028, driven by aging populations, diabetes, and rising screen time. IVF, supported by declining fertility rates, is expected to hit around 12,000 to 14,000 crores by 2028, with over 5 lakh cycles annually. Mother and child care is set to reach around 41,000 crores in maternity and rupees 1.7 lakh crore in pediatrics by 2028. High growth emerging areas include dental care, expected to grow to around 80,000 crores, with just 3,000 crores coming in from aligners. Urology is projected to see a 9% volume CAGR, dialysis at around 10% volume CAGR, and skin and hair care growing at around 17%. While the single speciality model is more efficient, scalable, and focused, potential risks remain, such as pressure to deliver PE returns affecting quality, intensifying competition, and multi-speciality hospitals ramping up their focus on super specialities. Well, on that note, we'll take a short break, but to speak more on the surge in single speciality hospitals, we have with us Anshul Gupta of Avendus Capital in the next segment. Stay tuned. Welcome back. You're still tuned into a halftime report on CNBC TV18. Let's continue our discussion on single speciality hospitals. We do have Anshul Gupta of Avendus Capital joining in to discuss what his perspective is on the single speciality hospital space. Anshul, hi. Thank you very much for joining in. And it's a very comprehensive report that we just spoke about in the earlier segment. But I just wanted to start by asking you about the private equity interest in single speciality hospitals. We've seen a huge interest in multi-speciality hospitals. If you had to compare the two in terms of relative growth and relative incremental investments, where would the two stand? Multi-speciality vis-a-vis single speciality.
Sure. And first of all, thank you, Ekta, for having me on the show. So to answer your question, if you look at the private equity investment in overall healthcare space in the last decade, it's been around $10 billion, of which single specialty has been roughly 1/3 cumulatively in the last 10 years. And a lot of that has increased in the last few years, where the single specialty business models are becoming more mature, becoming more scalable. And a lot of it also has to do with how the India macros are tracking. Secondly, I would also like to point out that when you look at the multi-specialty hospital space and go back 10 years in time, it was also at a stage where multi-specialty was still developing, and a lot of private equity money went into the multi-specialty sector. So just to give you one stat, about 10 years ago, the listed market cap of all the multi-specialty hospitals in India was around $3.5 billion 10 years ago. Today, that number is north of $50 billion. So a lot of that value creation and maturity of the business models that's happened in multi-specialty, we are just starting to see that happen in single specialty, and hence there is a lot more private equity interest in the sector.
Right. Anshul, I track the consumer space and I often draw parallels between hospitality and hospitals by virtue of the business models that there are as against the end, services that they offer. And we started out with quick service restaurants, which were multi-cuisine, etc., to cash in on the trend of all the diners wanting to eat out. And thereafter, as the industry matured, everyone was looking at single, cuisines and specializations from a restaurant standpoint as well. Similarly, this is playing out in the hospitals business. What do you think is the growth headroom here? Because, on the one hand, share of stomach is very different from share of health. And secondly, as a nation, do you think we require a lot more general hospitals, multi-specialty hospitals than single specialty hospitals?
Yes, no, absolutely. Look, that's a great observation and comment. So very much, if you look at healthcare consumption, it's a it's in many respects a branded consumer play, and particularly so in single specialty. So you could think of single specialty as a more retail-driven, convenience-driven model for most of the single specialties, if not all, of course. Whereas multi-specialty is a more destination-driven model. By that, I mean a patient would travel to a particular multi-specialty hospital for a certain type of treatment or a certain type of doctor. But when it comes to services like be it eye care, dental care, or hair and skin clinics, there's a lot of preference for localization, for neighborhood, and convenience. So to your question, do we need a lot more multi-specialty in general hospitals? If you really look at from a macro level, India is still significantly underpenetrated.
Exactly.
So there is still a lot of need. However, when you further break it down into the big cities, the metro cities versus rest of India, there is a stark difference, right? So when you see a lot of saturation and bed capacity availability, it will typically be in the top 7 cities of India and then maybe the next 20 cities. The moment you start going down further in the hinterlands, that quality care starts dwindling very fast, right? So on multi-speciality, there is still growth, but it's likely going to come more from tier 2 plus or from localization of multi-speciality itself. So if you pick a city like Bangalore, for example, it's very localized market, right? So people from Whitefield would not like to travel and go all the way to Electronic City for any treatment, no matter how reputable a doctor or hospital may be. So therefore, a lot of localization is happening within the multi-specialty hospitals.
Okay.
When it comes to single specialty, by definition, it's a much more localized and small format business model.
All right. Well, Anshul, I just wanted to narrow down on the competition fact of it, because now we have multi-speciality hospitals also which are focusing on single speciality, segments, say, for example, oncology, or say Apollo, which has multiple segments which it focuses on, such as fertility, dental care, etc. Do you think that single speciality hospitals are currently under threat because multi-speciality hospitals now realize the potential, are getting on the bandwagon as well?
Sure. Ekta, I would put it, actually, I'll break it down into 2 parts. One is what you described as a supply side factor. So that's where multi-specialty hospitals are trying to increase their services or upgrade their services, particularly when it comes to the experience factor, right? Which is where a lot of single specialty setups score over multi-specialty hospitals. But at the same time, there are very strong demand side factors. By that, I mean the patient preferences, right? So if you take an example like birthing or child care, when a mother is looking for delivery, for her, it's a joyous experience. She need not, or the family need not prefer to go into a large multi-specialty hospital, but go to a maternity clinic, which has a better overall experience, right? Similarly, for eye care and a lot of other procedures, there's a lot of specialized equipment and technology that's very specific to that treatment, and that's not really useful for rest of the hospital or for multidisciplinary approach. So in hospitals as well, especially the large super specialty hospitals, their focus is driving more high RBOP or high revenue procedures, which are typically involving surgeries or overnight or longer term stays, whereas single specialty tends to be typically daycare or a few hours of procedure, and where patient experience become very important. So I would say it's actually the reverse. I think I, in fact, see a few more of what is under multi-speciality today, maybe perhaps coming into single specialty fold down the line. And example being, while oncology, the surgery part of oncology is very much the domain of multi-specialty hospitals.
Sure.
But things like chemotherapy, which requires a patient to just come to the center for a few hours, get the chemotherapy done and go home. So those kind of daycare procedures are better suited, and increasingly single specialties are taking bigger share of that from multi-speciality hospitals.
Okay, just a quick last question before we let you go, Anshul, and if you could just give us a brief answer. If amongst all of the specialities, which one would you put your money on in terms of the maximum growth potential that you could probably envisage, and maybe the highest amount of return for a private equity as well?
Yeah, sure. I mean, look, it's hard to single out one, but if I were to say, look at the macro factor, I would actually put eye care as one of the factors. And very quickly, stats, India is, from its macroeconomic development standpoint, maybe where China was 15 years ago from a GDP per capita standpoint. And we have seen in China a lot of these models scale up significantly, driven by aging population, higher affordability, and also more discretionary spends in procedures like getting the refractive corrections by LASIK surgeries and such. So it's not just about getting your cataracts removed, but also lifestyle choices, which is driving a lot of growth. So I would pick eye care as one of the very exciting growth sector, as well as IVF and some of the other areas like wellness, sports nutrition, sports wellness, sports medicine, and also dermatology.
Take that point, Anshul. Thank you so much for joining in. It's an interesting discussion, but a longer conversation that this warrants, and particularly interested about the prospects of sports wellness, sports nutrition as the overall rise for activity increases across the country, and a lot of that led by people who are above the age of 30, more prone to risks and injury risks, etc. as well. We'll talk about all of this on another day, but thank you so much for joining in. Take a short break, come back, get you more on the markets, perhaps get you some stuff on the commodities arena as well, as Manisha Gupta joins in. Welcome back. We have Manisha joining in with all things jewelry, I believe. She has with her Colin Shah of Kama Jewelry. Manisha.
Thank you so much for that. Well, yes, there's just so much to talk about when it comes to jewelry and gold, and of course the government notification that came in last evening as well. But Colin, as always, let me start by asking you about the gold prices, because even as everything around seems to be still uncertain and there are way too many headlines from the geopolitics side of the world, we haven't seen the gold prices run up too much. Is everything already baked in?
No, it isn't. I still firmly believe, and like I've been sharing on your program, that I see gold going up to $4,000, maybe by 26. In this journey, we'll be between 3,400, 500, slight dips at some time, selling. But long term, if you look at it, we'll continue to see this going up. So I don't see any worry over there as far as the gold is concerned. The worry is the geopolitical issue, which is causing, this whole, I think bull run to begin with. That because of de-dollarization, gold is definitely a safe haven. Every central bank in the world is buying. And the jewelry consumption has been affected globally in terms of volumes, because the price rise has been too difficult for the consumer to, I guess, absorb. But we do see that from these 3,300, 400 levels, gold going to 4,000 in the next 6 to 9 months.
Colin, you are one of the very few people that I know in India who actually dabbles with across precious metals. You do gold, you do platinum, you do diamonds, you do lab-growns as well. So I also want to talk about platinum with you, because this is where we've seen the latest major action come in. How much would you say is India's share when it comes to jewelry within platinum? What has been the kind of growth? Do you see that increasing?
See, platinum has grown. India traditional, from, the last, I guess, since independence or our ancient times, has always been a yellow gold market. And generally on our skin color type, yellow has looked, I would say, more the apt metal over the years. Now, what platinum has definitely made inroads in, and thanks to the efforts of the Platinum Guild, especially over the last decade, is they've been, I guess, greatly successful in creating these new categories. So Platinum Day of Love, and the couple rings, for example, though they were popular globally, in India as a concept didn't exist. And now, it's like a done thing that a couple exchanges, platinum couple rings, and especially in South and even Northeast, West, it's picked up quite a bit. Besides that, men's, which was always, a category, half the population is men. But for some reason, this was not, I would say, served on the jewelry front properly. So platinum is ensured, especially with all the ad campaigns they've done with the cricketers and everything, that men's chains, bracelet, gadas, rings has now become like a mainstream category with every jeweler. So originally, I guess platinum maybe started as an insignificant amount of the total market, is slowly inching towards between 5 and 10% of the overall market in India, which is a significant, tonnage, I guess, if you look at it that way, even compared to any other global market, because of the simple reason that gold is so big in India. So even a small percentage of that is a significant volume in platinum.
Oh, absolutely. I get your point. India's half population is men, so obviously men jewelry should be doing quite well there as well. Colin, my next question is on the notification that came in from the government, clearly plugging those loopholes in sense of gold imports there, which has been coming in garb of platinum, iridium, palladium, even chemicals, even in sense of liquid gold there. Would you say the notification that is coming now yesterday does work on ground though?
See, it's a tough one. I'll be honest to tell you. The notification, I understand why the government did it. I guess it's to obviously curb, gold coming in liquid form. So gold, because of, I guess, the nature of what it is and the price that it carries today, and the arbitrage which you tend to make between international price, domestic price, people find new innovative ways of getting it into the country duty free. And the government, in spite of best efforts that all of us have made, even from council, government, there's always one new way. And to plug in these loopholes, I guess the government had to do this. I hope there are clarifications because what this effectively does is it stops liquid in all forms, so especially rhodium plating, which is essential for manufacturing today. So we are hopeful that we'll make some representations over the next few weeks, and the clarifications that we need will come, and genuine business will not suffer for this notification. Right now, the way it is that if it is a non-FTA country without a license, you can bring the metal in, but that makes it a little challenging, I would say. So I understand why the notification came, but we'll need certain clarification so that business, especially season time, is not damaged. And while I was, just going through this, and if you give me a minute on platinum, I just wanted to say one more thing. Is like we spoke about gold and the price going up. Platinum today is at a 5-year high, like and it's grown 45% in price since January.
Yes.
So I guess it's appreciating too. So while we built these new categories, even from an investment point of view for the consumer in India, and they're always been so focused on appreciation.
And price
Platinum,
sensitivities.
yeah.
Yes. And even as it's gained up by 45% in this year, it still is trading at around $1,300 an ounce, half the price for where gold is. So clearly,
half of gold. So still a 2.5 time difference between platinum and gold, but appreciating new categories. So
So platinum it is. That's what we'll keep an eye out on. But more importantly, Colin, you're selling jewelry to men. You're not wearing any on your face yourself.
The next time
he'll come out and show his hand and look at this.
No, all I have is just the wedding ring, which, by the way, is platinum. But I'll probably try and get a couple of studs, etc. No, I don't think so.
The other space that is actually where the money is moving is the watch segment, the high-end.
Watch is the new jewelry.
Where you know that you're actually wearing real diamonds in that watch. So you're not actually wearing lab diamonds. You shelled out the money. So that's a topic for a different day. But nonetheless, Manglam, what about you?
Nothing. I wear the technological watch and I wear my wedding ring. No other jewelry on me. So I guess there is a lot of headroom. So since Manisha and all these guys, every time there is Dhanteras and all, they say that what are you buying for Sonal? Let me ask Sonal now, what is she buying for me? Since he's saying that men's jewelry is the next big market.
Half the population is men, so I think that's a huge market going forward.
So we'll watch out for that. But meanwhile, don't lose sight of the market. 25,000 on the Nifty once again. Nestle is the stock which is at the high point of trade. The board meets on June 26 to consider their first bonus. Remember, earlier in January, they went ahead and split the stock 1:10. So now there is another bonus coming the way of all the shareholders. Take a short break, come back, get you more on the markets and a lot of stock-specific action.
Welcome back. Well, time for an exclusive conversation now. Varun Berry, ex-Vice Chairman, MD and CEO of Britannia, tells CNBC-TV18 that they expect to be around a 25,000 crore revenue company in the next 3 to 4 years. Listen in to excerpts of that conversation as he talks about their product pipeline and their strategy versus the new age brand.
Let me tell you about my own sons. They are both in New York, right? And when we go there, we want to go to a Starbucks to have a coffee, and they don't want to. My older son lives in a building where he has a Starbucks in his building, on the ground floor.
Yes.
And he told me that he's been there for 4 years, he's never been there even once. But they go to a whole lot of other coffee shops which are smaller, and they think that they are contributing towards a new brand which is trying to establish themselves. That's the thinking of the youth, right?
So let me, just circle this back, because I don't know whether you remember this or not. 10 years ago, we had this conversation, and you had given me the example of your son only, and you said that how you won back your son. Why? Because your son was having the parlay hide and seek. At that time, Good Day did not have a very exciting chocolate chips proposition. You got your teams to work, and then you had the Good Day choco chip biscuit that came out. And eventually you won your son over by offering a better product. Now, cut to this time when your son is shunning all these bigger brands, looking for exotic experiences, which may not necessarily come from bigger brands. What are you doing to win him over in the categories that you operate in?
No, so that's right. And the way to do that is exactly what we've done with Harry Potter, the Pure Magic Harry Potter. I think you've got to have very exciting products which stick to what the youth wants, and understanding what the youth wants is very important, right? As you talk about, last time we met, you said, these guys are offering clean labels and some of the large companies are not offering clean labels. So, making sure that you offer clean labels if the youth wants that. We've got a young managers council whereby there is a certain block of managers who are under 30 years of age, who are becoming like an advisory committee for us. One, they spot potential and they tell us what's happening in the world and what are the kind of products which are doing well with the youth and why. Thereafter, they even get involved with our launches. They evaluate our products. They tell us what is right, what is wrong. They evaluate our advertising. They tell us how we can sort of fine-tune it to get to the youth and to get them to buy into the product. So and that's working really well because.
What are some of the ideas that they've thrown up lately?
There are many ideas in the pipeline which we are working on.
Like?
No, that.
Come on. I've come down all the way to Bangalore. You got to tell me a few things.
I'll tell you in private. I don't think we are 100% successful, but we are moving in that direction to make sure that we become a large company with the heart of a small company.
How much do you think revenue for Britannia would come from protein or some of the new categories that you are seeding over the last 1 year or so that your young team is talking about?
So currently small, but it's only the dairy space where we have cheese which has got high protein, and we've got Greek yogurt which is high protein. But as time goes by, this is going to become very important, especially with the GLP-1s coming into the market, right? I believe that in the US, 1 out of 6 consumers are on the GLP-1, right? And that leads to, making sure that you cater to their requirements, because obviously their system is modified, their likes become different. So I think this is going to become very important as we go forward. And I believe GLP-1s are going to come into India as well at 1/10 the price. So we will cater to that and make sure that we enlarge our portfolio on protein.
How would you evaluate yourself when it comes to the total foods company vision that you had, say, 10 years ago?
40%.
40% there.
Yeah.
What other categories are you seeding?
So we've seeded a lot of categories in the past. We've changed the portfolio of cake. We've brought in croissants. We've brought in milkshakes. We've brought in wafers. We've also seeded in some test markets in salty snacks. We've done some test markets with protein bars. So all of that, and some of them have gotten to a stage where they are at the next level of growth. Some of them are still at the test market stage, but we will continue to do that. And the trick now is not just to keep seeding these, but the trick is to grow at a much faster pace with the current categories beyond biscuits that you have, and that's what we are working on.
Perfect. We've always spoken at milestones. Once when Britannia hit the 1 lakh crore market cap, when it entered the Nifty, now it's nearly $2 billion in revenue. Next one happens when 20,000 crores of top line happens, hopefully very soon. 25,000 crores, when does that happen?
I would say next 3 to 4 years.
Perfect. So next 2 interviews are sorted, 20,000 and 25,000 crores. Thank you so much, Varun.
Thank you.
Always a pleasure speaking with you.
Good to see you.
All right, the company becomes a 25,000 crore revenue company in the next 3 to 4 years. That's the strategy laid out by Varun Berry. You can hear excerpts of all this conversation all day today on CNBC TV18. Take a short break, come back, focus on the markets. The Nifty comfortably over that 25,000 mark and now heading higher, led by HDFC Bank. So the Nifty Bank has been doing well, Reliance has been doing well, HDFC Bank now comes to the party at the high point of trade. And alongside that, we do have a bunch of other private sector banks which are picking pace as well. Don't lose sight of Bharti Airtel too. That's a stock which has moved to the high point of trade in just the last few minutes or so. With that, we're out of time on this edition of Halftime Report. You stay tuned to Business Lunch, which takes forward all the market action on CNBC TV18. Thank you for watching.